Certainly, we will see a rebound in the export figures because of, as you mentioned, the trade detente, although it should be noted that the tariffs on Chinese imports are still very high in the U.S. market. The Peterson Institute estimates that on average, they're close to 47% actually, and they cover essentially 100% of Chinese imports. But the reality, of course, is that the Christmas season is drawing near for a lot of American goods that Americans purchase. There really is no alternative in the short run to China as a source. So I think we will see a significant uptick in exports to the U.S. And of course, China really needs the exports right now. So something in the range of 3.5% to 4% growth year on year is quite likely.
We heard from Jameson Greer. He's putting the figure at 25%, the drop in goods trade, and it's headed in the right direction. How much further do you expect this decline?
I think the reality is that businesses on both sides are recognizing that the trade environment between the two countries is not going to get too much more pleasant. Maybe there will be some de-escalation of hostilities, but given the degree of uncertainty surrounding the tariffs that could be imposed by both sides, let alone other types of restrictions, including on financial flows and so on, the reality is that these two countries, although they can't avoid each other because, after all, they are the two largest economies in the world, there is going to be an increasing sense that they are not going to be the trade partners that they once were. So I think we are in a structural decline in the direct China-US trade. Now, of course, you might see trade being diverted through other markets, and we've already seen, for instance, trade being diverted through Vietnam, Mexico, and so on, although the Trump administration has tried to block those diversion channels. But certainly for the direct trade, I don't see any clear opportunity to increase that. If anything, it's going to decrease over time.
As we are waiting for U.S. and China to hammer out the trade deal, of course, some more details we are waiting to hear from them. What is the influence on the Chinese economy?
For China right now, it is a rather fragile period because the difficulty that the Chinese government is having is that it has been able to boost GDP growth, but that has come by intensifying the already existing structural imbalance in the economy. In particular, much of the growth that we've seen in the post-COVID period has come from credit-financed investment growth. And a lot of that investment is not being undertaken by the private sector, but by state-owned enterprises. And on the other side, you have very deficient household demand. So China is really not able to soak up the output that it is producing, and that its factories continue to pump out to a very significant extent. So it has become much more reliant on exports. And as was just being discussed in the previous segment, I think this is creating concerns around the world about becoming essentially a dumping ground for Chinese exports that are not able to find their way to the US and are looking for alternatives.